Hello and welcome back to the MSU Wealth Management Association podcast. I am your host, Stephen Bowe, and today we are joined by Nate Cook, a recent MSU graduate, an advisor at Raymond James. Nate, can you tell us about yourself? How are you doing today? Thanks for coming.
Hey, thanks for having me. I'm doing good. So, a little bit about myself. I went to MSU, graduated in 2022, went into a financial analyst role out of college. Kind of thought was the trajectory I thought was my dream job, position to get where I wanted to go. And I just love the financial markets and exploring them. I think as an advisor now it's a really good parallel because we have such a focus on planning. To have a little bit of different perspective on economics is my main focus, but also understanding the planning aspect. So I worked financial analyst for Carbon Market Exchange. One of my mentors, he actually was a professor at MSU, and I love MSU. It was a great time. Didn't meet my wife there, but my wife went there with me, and top easily top 4 out of 5 favorite years probably pulled from MSU so far. I know I'm only 25, but it was a great time. I love the university.
Awesome. Yeah. And was the Wealth Management Association as prominent as it might be now back in the day? Can you speak towards if any involvement you had in that, if any, and how it might have played a role into how you got into the Carbon Market Exchange and to Raymond James later on?
Yeah, absolutely. So I got into the markets when I was about 8 years old, as a fun thing to learn with my grandpa, and it went from there. And when I got to MSU, I was more thinking like the business management. So my major was in management at Broad, and I really didn't think I was going to go into the financial advising space. So I wasn't part of the Wealth Management Association. But my biggest regret was not participating in it. I know it was prevalent. I had friends that were in it. Hindsight 2020, but if I could have went back in time, I wish I would have done it. Perspective is everything in this industry. Everyone's wealth management team operates a little bit different. So having that there and having alum come back and just have a group think, and my understanding of what it is super valuable. So didn't participate in it. Wish I did. And that's why I'm coming back, is to participate and give back and encourage people that maybe are on the fence about this industry, to hop over and join it. I think having an association that preps you for what the real world might look like is huge in college.
Right. Yeah, got it. And I like how you spoke about how perspective is everything. And I think that's, I definitely see that with all the advisors that we're having the privilege to see come into the association, and kind of tying that in with your experience as an analyst. How did your perspective on advising change or enhance when you got into this position as an advisor, combined with your prior experience as an analyst? How did that translate over?
Yeah, I think, sorry. No, I think it really helps with the just evaluation of companies. And then the biggest thing with the transition is with that perspective. And when you have a client come in, they're at a different stage of their life, knowing what these companies do on the analyst role. A large part of my position at the analyst spot was evaluating companies on a ESG score or an environmental score, and we did project financing. So we would essentially find a project, try to suit it with a publicly traded company to improve their reputation or just how people view their company. I mean, it's good for marketing, but a lot of the companies that I'm invested in now for my clients are companies that I worked for on the other side, where I got to deep dive into the things that maybe you don't see reflected on a financial report, but are very present in terms of business planning for a company.
Wow, that is really cool, actually. That's super interesting. And so, would you think you would have selected these investments or had these investments at the ready for your clients, if not for that analyst role, or what can you speak?
I think I would have been at a different stage of qualification, to like review someone's financial life and then parallel it with a company's life.
Mhm.
Um, ESG kind of has fallen to the backside of a lot of people's priorities um, in retirement because they're more concerned about just their family, their life, making ends meet, living the life that they worked towards their whole career to have in retirement. So I would say it gives me a better perspective on business than it does on individual investments of companies. There's a lot of things that with the efficient market theory and um, fundamental analysis that would pop up with a company that everyone seems to know about because it's public information, but it gives you a perspective on what companies are doing in the future more than where they're allocating their dollars today. So there is a shift, and it goes through politics most times with the ESG, what's incentivized by the government to do, but we do see a larger focus with investors and people as they plan to retire that they want their dollars put towards something that's for a good cause. So I don't know if that answers your question, but it's the best answer I have for you.
No, it was good, and also gives details around it too, so it's perfect. And I'm bringing us to today's age, I guess, in at Raymond James. Can you talk about the experience there and what tools that you get to use over at Raymond James and what opportunities are made available to you as an advisor?
Yeah, absolutely. I think I looking at a firm and joining a company when I decided to go down the wealth management track was Raymond James really just shined for having autonomy with their advisors, but also putting the resources up front to be prepared to actually serve a client. There's my wealth management team when I got here was kind of baptism by fire, just kind of thrown into situations, and I think that's great. But I also think that it's super important to have a firm that puts the resources behind you to to, under, to understand the planning and the
Mhm.
economics and the finances, and not just get people that trust you, but being a trust. Sorry, I gotta drink a glass of water.
You are all good.
Being an advisor that's trustworthy, but also has a referable product. Because we are in the service industry, and I view my service as a product. So I think Raymond James does an extensive version of that in training. So my first year at Raymond James, it was all about just mandatory training. Kind of felt like back to college. And I know some firms just say, "Hey, you're going to make it or you're not. Use our stuff." But because Raymond James doesn't really have proprietary trading and they use everyone else's products, that they put such a focus on being able to pick the products, pick the investments more than some places where there might be a bias towards, hey, we have the best large growth, so put it there. Uh, that might be true, but things always change in the markets. Whatever's happened in the past won't happen in the future exactly how it did. So I
Right.
think Raymond James has been a firm that has positive revenues and has had made money since their existence, and not many investment firms can have that growth and say that across all fronts.
Mm, very interesting. And when you talk about this extensive training period and the baptism by fire, are there any memorable moments in there where you're like, okay, that one was something that taught me a lot, and I remember that day? Or is there anything that was like that is maybe 5% of the advisor I am because of that day?
Yeah, when I got into it, I think a lot of advisors are like they want to be their own CEO and they want to run a business, and that it does give you the flexibility to do that. But it also comes with sometimes cockiness, especially from newer advisors and just people getting out of college, not really know what they're getting into, or just leaving and shifting different areas of finance. We had training one day, and I was just like, about 45 minutes, and I was like, this is a complete waste of time because what they were training wasn't clicking. It was more on the planning side. An economics nerd, and I kind of always, when I started, at least through the training, I underestimated the planning aspect.
Hmm.
But this was like the aha moment. Was like, why are we asking these questions? Why are what are we trying to get to? And they're like, well, you're asking like simple questions that get to a pain point, and you might know them, but they're not going to know them. So when it gets down to a plan, because it's such a competitive space, if you can find one gap and find one pain point that an advisor's not doing, it might be worth your whole fee, um, of what you charge and what you service, because there's so much, there's so many opinions, and there's a lot of things that we state as fact in terms of investing. There's nothing in fact in investing, what I've learned since I started when I was 8. And the fact that the plan is something you can go back and lean to when there's uncertainty on those things that, hey, a perfect example is, there's the efficient market theory. Everyone's pretty much saying passive is the way to go. And I agree, passive is great. It's been correct. It's been hard to beat. It's low cost. It's what your clients usually need, but does it fit into their portfolio? But if there was ever a time when passive goes south, and I mean, it happens, markets go through recessions, having those pain points to remind your client and have the plan be the thing that gets you through the bear market and keeps your client happy, because not all times are the numbers going to look good on the screen. And just putting it, it really was my aha moment on, okay, planning is just as important as investments, but investments are just as important as planning. And that was a change in perspective for me, from like, okay, doesn't matter, the numbers are going to be good, but I mean, systematic risk is going to happen, and the market is going to sell off at some point. And that's how important you keeping your clients happy and keeping that plan in place so they don't panic, as finding those pain points.
Yeah, I think that's very well said. And I've heard that, it's always a hard job to be an advisor, but especially when the markets are down and you've got to tell the client who is thinking like, they just want to know if they're going to be okay and everything. And you're the person that instills the confidence in them. I think that's a really cool spot to be. And not to mention that I would have the utmost confidence if my advisor told me that I started this when I was 8. I think that would hype me up a little bit. I'd feel pretty good about it.
Yeah, I appreciate that. I didn't start the career track I was on, but I did love the stock market when I was that young. So
Right.
I still do. I love it more than ever. So
Well, got it. Well, then, speaking of that, then, as such a young professional in this industry, not 8 years old, but a bit older, how do you go about really earning these clients' trust, especially backed by such a celebrated name like Raymond James?
I think Raymond James helps a lot. They do a thing called a bio visit. If you ever had a client that had enough assets, they would pay for everything to fly them down. You get to meet the CEO of the company. You get to go see home office, which is like six 20-story buildings, 12-story buildings. Each of them vary, and you get to see all of the resources that go into what we do. I think it was a big part too of going independent versus joining a team. I joined in a very experienced team, that chose Raymond James as their transition point in 2022. I think for the same reasons. I think there's a lot of value in having a corporation behind you with that many resources. Um, I mean, I've had conversations where I've learned something about wealth strategic planning with trust and new tax codes that I would have never had if I was independent. But that was things that I could just go call someone that their whole job at Raymond James is dedicated to being an expert on that. So I can lean on them. Um, Sometimes you don't have that when you're fully independent, or you don't have the resources or respect, um, that Raymond James might have. So I think it gives a lot of credibility when you can say, hey, there's this many people working behind us. And then I think credibility with Raymond James in terms of their integrity, and they put their clients first and they put their advisors first. And that's really what their whole business is built behind, is letting us decide what's best for the client and preparing us to do that. So I think that helps with trust. And then I'm an avid reader. I believe that I might know a lot, but the amount I know versus what I can learn is so massive that I'm just so encouraged to read every day. Um, I like to read about economic history, and that can be a trust point for an older client. They're like, "Well, you don't understand what happened in the '70s. You don't have understand what
Hmm.
happened in 2000." It's like, I didn't live it, but I've put a lot of effort into understanding what happened and those warning signs, and also it helps me meet them where they are. Like, well, yeah, it happened this, and now you think it's happening again. Totally understandable. But what has the stock market done from this and then? Like, if you jump ship because of something that happened in 73, are you jumping ship now because you see a parallel? So they're like, wow, he really knows his stuff. I think knowledge is so important when you're starting in the industry, and then having a firm that has your back.
Yeah, I think that's super interesting, especially when there may be an advisor who say they're 50 years old and they do have some of that experience where they were there as an advisor in 2008. But yet, if they don't have the plan or the conversational skills to guide you through everything, I guess the balance there, it's funny that you're able to know so much at such a young age just from reading. I think it's advantageous for us all to get acquainted with the stuff that happened in the past so that we can compare us to the older advisors and stuff. So that's a good, I appreciate that. So moving on to the next question, I guess, what's next for you? What career goals do you have? And you were talking about how there's someone at Raymond James who their job is they have to know all the tax codes and they're the tax guy. Do you see yourself moving into a position like that anytime soon? Or do you want to stay in as an advisor? What's going on?
Yeah, I plan on staying advisor the rest of my life.
There we go.
I think because as long as Raymond James continues to allow us to have the autonomy to make those investment decisions, every day I spend hours trying to commit myself to understanding the companies that we're invested in, the market as a whole, global pressures, microeconomics. I think that's my focus. But really, this year, I want to put a focus on growing my book of business personally. I feel confident that I have one of the best offerings in our area, at least. And I think going back to what we were talking about just before this about being young but understanding it, I think the industry, from coming from outside of it and working in finance and then taking one step in and taking about a whole year to understand the competition and where the market's at in perspective. I used to think like, well, an older advisor, they're just stuck to their ways, and that might be true, but there's also older advisors that have adapted through it all and still have great practices. But the big thing for me is meeting people where they are, understanding the market, and then offering a 21st century wealth management program. I think the tools with technology and AI have really changed how we can be efficient as advisor. The touch points, how we communicate with our clients, automation. On the investment side, there's offerings that have become available for clients that are you would say like the normal folk or like a normal retirement wealth that wasn't available 5 years ago, and that has always happened. The investment side of things just progresses to get more efficient and lower cost. Now, if I can meet someone in lower cost and know all the economic stuff on the backside, that's my plan. That's how I want to grow. I believe if I can get a meeting and we can talk about it and we can touch those pain points, what they're worried about the economy or what's worried about with their own life or their own job, and I can bring a whole like a worldly perspective into it, make sure that their assets are doing the job they need to for the client's life, then I think that's my plan on growing this year. Getting in front of people and being actually talking to them. I didn't put a focus on that in the previous. It's been good, but I think now's the time that we can really help people understanding where the industry is going.
Yeah, and speaking more about helping them understand where the industry is going, how exactly do you plan to have those conversations? Excuse me. Like, what might those conversations look like with clients when you talk about the future of their investments and what it looks like as AI and everything gets more and more developed and where wealth management is heading in general?
I think if you can get the conversation, I think the sales practices that every firm still trains on to get people to have the conversation with you are still practical. I think being a real person and just saying, hey, acknowledging where I am in my career, and then presenting them with, okay, I understand why you have had this and it's worked your whole life, right? But things have
Mhm.
changed. Things have if you had an offering or you had a mutual fund that did this, let me just introduce you to something that functions similarly with maybe more tax efficiency or lower cost or just as better fitted for liquidity needs in your life. I think every financial product has been made for a reason. Smart people have made them and at their time and place. And sometimes people are hammer people with investments where they, whatever the issue is, will fix it with a hammer, or duct tape people or patch the hole with duct tape. And I think having knowledge on what product is used for and what holes it's supposed to fill are very important. And I think some of the older holes, you can take that duct tape off and put a more permanent patch on it with a new investment offering that better fits your plan. So I think just explaining it to a T. I know a lot of advisors talk about not getting in the weeds, and I think that's great. But sometimes, if it's a pain point that it's worth going in the weeds for, then go in and talk about it.
Got it. Yeah, and that analogy with the hammer and the tape and everything, I think is actually really fitting, and I think that's a fantastic analogy.
Thanks. It's not mine. No, I took it from people.
Well, that's how you know it's good, because it's been through a couple of people and they were like, you know what, I'm using that one. So there you go.
Absolutely.
So I guess my last question for you here is for all the students watching, is there any advice you have on how to make it as a student, how to make it as an advisor, how to make it as a person? What do you got for us? Any books?
I think number one, I got a lot of book recs. I think they depend on, but number one is being a listener. I think there's such a big value in just, I know you have things to say as an advisor, and your job is to advise someone. But getting to the point where you have a client or a prospect talking for 10 minutes on end about something that's important to them, and understanding that early on will really foster those valuable relationships that are hard to get when you're young. Number two, I think you have to continue to learn. I think in our profession, that you get your Series 7 or your 63 or your SIE, and then we think it's okay, I'm done educating myself. Now I'm going to go and learn as I go. I think things are growing at such a fast pace in our economy with technology that you have to continue to learn and put a conscious effort into learning. So listening, learning, I think the best way to learn is books. There's a lot of biases out there with media, technology. A lot of people are trying to sell something. And I think my favorite thing is to find a billionaire, a very successful man that has spent the time to write a book in the middle of their career when they have no reason or motivation to make money off of it, and they just want to share their thoughts. I think those are your best information sources. Listening, learning, I think being original. Don't just be someone you don't be a microphone for someone else. If you don't know something, be willing to say, I need to go learn more about it, and speak up when you do think you know something. And then being young in the career and the students, I think you have to do as much as you can. Like the Wealth Management Association, be willing to go to seminars, be willing to learn new perspectives, even if you think they're incorrect, be willing to do that. It's so important. And I mean, you're going to have clients, or you're going to have prospects. They're going to tell you you're wrong, and they might be correct in what you're talking about. And to have that humility behind it and being able to learn from specific people, I think it's really valuable. The way I've tried to build my book is find successful people, be more selective on it, quality over quantity, and then have clients that can teach me about their specific teach me about their industry, so I have a better idea of when things are going to go south, or hey, things are really good because of this right now. And then when things do go south, I can say, hey, well, is it this reason? And they seem like I actually care. So that it's listen and learn. I can ramble about books all the time, but I think you just have to be able to work for someone. Don't think you can go solo in this industry. You can make it solo, but I don't think you're going to be offering the best service. Working for someone that's been in the shoes. I'm honored to work with a great advisor that's been in the industry for 35 years, and then his son, who has a CFP and has been doing it for 10. We all have different perspectives on planning, and we all have different perspectives on investments. But I've learned so much from both of them. So that learning and listening, that's the
Learning and
game we're
listening.
in. I know we're an advisor, but those are the two things.
And I think it makes a lot of sense. You have to be a good listener in this industry, and you have to have those conversations. And I like what you said about once you let someone speak about something they're really passionate about for 10 minutes, that's when just let them go, let them go. And I think that's really cool. So anything else for us, Nathan?
No, I appreciate you having me on. I thank everyone for listening. Hopefully, the future advisors that listen to this podcast and other advisors can take something from it. I've certainly taken a lot from the podcast that the program's put on so far, and especially because it's people in our area and our region of business. It's been really valuable for me, and I've learned things from their perspectives. So excited to go back to MSU every time I visit. Reminds me of the old days, and hope that the football team can turn around. And the basketball team looks pretty good right now.
It's very true. We're a basketball school, at least this year, right? So, but I think I speak for all of us when I say we appreciate having you on, a young advisor as established as you. We all hope to be in your shoes one day. So, without anything else, I really appreciate you having on, and thank you for watching the MSU Wealth Management podcast.
If you enjoyed the discussion, please like and share the podcast on Apple and Spotify. The Spartan Journal podcast is part of Michigan State University's Wealth Management Association, a student organization whose goal is to inspire the next generation of financial advisors. The Spartan Journal news team releases a newsletter every Monday morning comprised of financial literacy and the week's market updates. Feel free to follow us on social media at msuwma and check out our website at msuwma.com. Anything heard on either the MSU-WMA or Spartan Journal podcasts is for educational purposes only and should not be considered as investment advice.
Any opinions are those of Nathan Cook and not necessarily those of Raymond James. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Expressions of opinion are as of this date and are subject to change without notice.